Okay, guys, let's get started. Welcome, everybody. So, like it implies, we're talking about how to grow your trading account and how you can flip funds on Bybit. That's basically what we're teaching today: how to grow your trading account and how to flip funds on Bybit. So, that's what I'm going to be teaching us. Now, there are three things to do this. There are basically three things to doing this, which I'll paste them here, and then we'll explain each of them. Number one is mindsets. Number two is what I call HPT. And when we talk about HPT involves asset class and strategy. And then number three is referring to risk management. These are the basic three keys. Now, once you understand these three things I'm explaining tonight, you'll be able to grow your trading account. Even if it's as little as $100, you can grow it very well. And then you'll be able to flip your funds trading on Bybit. It's the same thing I've used over the years. For the past couple of years, I've been trading. When I started flipping accounts way back, I think sometime 2020 was when I started doing a lot of flipping of accounts. Or so late 2019, 2020. I started doing that aggressively, a lot with synthetic indices then and all that. But this is basically what I was using and applying then before I decided to start duplicating and replicating the same thing for what's it called, cryptos in cryptocurrencies. So before then, I've been trading cryptos since 2016, but I have not really been should I say growing account, flipping account, because it's cryptos hasn't really been much of the forex thing. Then we were trading what these futures we're trading now. It was basically it was called leverage then with BitMEX. So we're trading BitMEX, and there are only two coins you can trade on BitMEX: Bitcoin and Ethereum. These were the only coins that you could trade on leverage, because there was nothing like futures. Binance then was not even an exchange. It was like Binance was among the way most people, you guys are mocking all these exchanges like Probit, Latukun, Hotbit. The way you're mocking them, that's how we used to mock Binance those days. We used to mock Binance as as a small pony exchange or so. But CZ has grown to become a market dominator now, as we can see. That's why they say don't mock people. You don't know how tomorrow is gonna be for them. So, but I was among people who used to mock Binance those days, and but however, over the years we started having Binance features coming in over time as well, and then started trying to. And I said, okay, this same thing I'm doing in forex, I'm doing in synthetic indices or so, boom and crash. Let me do it here, and then I said the same principle works here, and I applied it, and it's definitely working very, very well. And I started applying it for Bybit. That was last year, especially last year on Bybit, and working effectively. Just three things. So number one is mindset. From number two, now when I'm talking about mindset is very important when it comes to trading. And if you check what I wrote here, the write-up I used was saying that Okay, guys, sorry for the I'm being distracted. But basically, let's continue. So the mindset is number one. Is the number one thing. Now, I always use the example I gave you guys. I gave people. I think that was in the ITC. This in the ITC. When I did the particular training, I gave an example, and that example was when I started trading synthetic indices. I met a lot of people. I paid for a lot of courses. A lot of different persons were teaching a lot of different things and a lot of amazing things. You know, the people you pay, you regret that. Why do you even pay this person this money? Different people with different things, different terminologies, which are some are good, some are bad, some are funny, whatever experiences. I've been there. Both times whereby you pay with your last time. I've done all that. Whereby you save money for months only to pay for a person's course. I've done all that. Anywhere you think you are in life now, financially, I've been there. And now, despite the fact that I get to, I was trading, I had friends too who were also having similar kind of results. So what we started doing was that we started contributing money together to pay people. So one of them would be like, okay, there's this particular course man that is looking at. I don't want to mention anybody's name, but a couple of my friends are quite very popular in Nigeria also. And then they will come and meet me and be like, well, Shifu, let us contribute money. There's this particular guy. He's very good. He used to post this, he used to post that. You know, all these people that be posting a lot of flamboyant lifestyle so they can get people to pay for their courses. And then when we now contribute the money we pay, we end up being discouraged for paying those for this because it's basically be teaching what we already know. And then some too will be very happy because it's like this person has given us a holy grail, so much amazing thing. And then over time, it seemed that some of them were not making results. Some of them, the results was half-baked, different kind of experiences. Different kinds of experiences. Now, these experiences, some people were making results, some people were not making results. Now, I now had a few friends, a few people I know. Should I say they are friends, but well, I knew them. They came across to me and they were like, Moshifu, this because then it was not synthetic indices. We were not doing currency. We just focused on synthetic. They were like, Shifu, this synthetic indices thing. If we're making money, if you're making small, it's just for you to be making your small money. Once you're making your small money, just be pulling it and buy and be buying cryptos because one day if it just hits you, you go lose everything. That was the time. You know, really, fit make big money inside here. Not just your one naira, two naira. That was the time. Now. And then, on the other hand, there are a few persons who believed differently, who had a different mindset. So my question, I was like, there are people who are actually making money from this thing, and it's not just small money. If these people are making it, they don't have to. It is possible. So what I started trying to get in touch or look for these people who are these persons. I think that's when I got in touch with Mrs. Money. And then I became friends with Mrs. Money. So while I was in Mrs. Money's group or so, I saw this guy, which was, I think that was Bliss. I think it was Bliss. That's where I saw Bliss and I saw Solomon Sergio. So we became friends from Mrs. Money's group. So Mrs. Money's group hosted a lot of traders across Africa and a lot of platforms. So when I met this dude, these guys were I contacted a few of them, reached out a couple of them, and different persons. There was one then, I've forgotten his name. That one was in Nigeria. Nigerians, we have this thing of pride. It's very stupid pride that is, especially with traders in Nigeria. There's this stupid arrogance that goes with majority of them. 99% of traders in Nigeria, there's this stupid pride that goes with them, especially when... So, there was a time I was relating with this guy, but he will curse you, he will insult you, it was so terrible. So I couldn't last under him again because despite the money you pay him, he will still curse you. And then I was with Bliss and Solomon. And I stress this. I don't trade their strategies or whatever. It's not their strategies that made me money, but it's what helped me. What I gained from them was just one thing: mindset. So we're in this group and community whereby we risk together. And I see people who are creating crazy risks. Like, these people are taking crazy risks. These people will fund their account and be like, if it blows, let it just blow. If it goes, let it just go. Hey, God. I think we're just 3 Nigerians there, or 4 Nigerians. The rest were either South Africans and different countries put together, Zambians and all that also. Now, these people believe one thing, that is possible. And the same way they believe it, despite the fact that we're having some losses, when you it's easier, the pain is easier when you're losing together as a group. You lose money together, you make money together, so the pain is easier. And we get to go with the flow. We go with the flow. And along the way, I started seeing big money. The kind of income was increased. The same money, but those my friends in Nigeria who were saying it's not possible to make it, we are now making it. So. And then right before us, we see different persons like Bliss. Some of you here, I know, have paid Bliss for his course and all that. I think there's a time I invited Bliss to hold a session with him about once or twice. We hold sessions together in the House of Work community. And I think one of the times he shared his story and all that. Now, this is the thing. Then I now saw Bliss and some other guys who were now, these guys were flipping accounts, $10,000, $20,000, and different other guys. $50,000, $100,000. I say, is it the same synthetic indices that they say is not possible? And then, cut the long story short, I made my first $100K in trading from the same synthetic indices that people say that it's not possible to make big money in it. I made over $100,000 trading it. Made over $200,000 trading from the same derivative broker. I withdrew very well, big amount. What is the point here? Why am I sharing this personal story with you guys? Is that a trader's mindset is the most powerful asset of the trader. What you believe is what you will see. You see, that is why you have to be very careful who you listen to and what you listen to. These are very, very important things when it comes to trading and investing. I look at there are a lot of people in the space, let's say in the crypto space. I look at them, I listen to what they say, sometimes I read through, and sometimes I shake my head. Some people I don't follow majority of them, but I will the statement these people say at times. And I ask myself, when I listen to and see some statement, I ask myself one question: why is this person making this particular kind of statement? For what reason? And I begin to study. Such question makes me to study the person in the sense of I want to know why. Why is this statement being made? I don't care about the statement being made. I'm cared about why is this person making such a statement. And when you look closely, you now discover that you see people who speak against. The only person I think I was able to speak to was there's this guy who's he's based in London, but he's a very open-minded person. But I was able to speak to him and change his mindset. Because I was able to, he knows my result, of course. He knows my own result. Now, people who speak a lot against, this is the thing. Most people who speak against what they feel in succeeding at. And so, they presume others will not be able to succeed in that same thing. And they generate a stereotype philosophy around it. So, it's just like when it comes to network marketing, MLM. I've had a very bad and terrible experience in MLM that I can never in my life encourage anybody to go and do MLM. I will never encourage anybody to do it. But at the same time, you will never see me come out publicly and speak against it. I've had bad experience. It doesn't mean people are not succeeding in it. Doesn't mean people are not triumphing in it. Doesn't mean people are not having good experiences in it. The experience that I had is just that I had a bad result, but there are people who are also succeeding in it. And that the bad result of one person does not tarnish the fact that this thing is working. The difference is, what does this thing is working for? What is the mindset behind it? Now, in crypto space, we have crypto investors and we have crypto traders. These are two different people. A trader and an investor is different. An investor is looking at, okay, long term, you buy into a coin and for a very long time. A trader wants to start trading. Now, traders and investors are two different of people. The way you can build generational wealth in crypto is by being an investor. The way you can generate steady income for your lifestyle is by being a trader. I don't know if you guys are getting the the differences I'm giving. The way you can make generational wealth out of crypto is by being an investor. But the way you can generate adequate money to maintain lifestyle is by being a trader. These are two different categories surviving two different things. So trading gives you, let's say, trading could give you capital for you to be an investor. Trading could give you capital to attend to your needs. Trading could give you capital to just live your lifestyle. Trading could give you capital to be able to build from there. But when it now comes to the fact that you want to say, generational, that is where investment comes in. So this was the same thing I did. This was the same thing I did from way back. So when I started trading, then I put out funds from my synthetic indices account and I began to buy coins, maybe $10, $5, $15, $20, in just smaller quantities that built over time and became big. But now, why am I saying this? Because mindset is crucial. Many of you here, some of you have been in crypto for a couple of years, some of you for a smaller period of time, and you listen to this person, you hear this person with different thoughts and different philosophies. See, the only set of persons you should stereotype your mind to listen to are those who can tell you that it is possible. Because what happens is that you begin to build a mental wall that can accept and receive the success you need. So if you believe that, there's a very stupid teaching that some people teach. They say that if you've not blown your account or if you've not been liquidated, you cannot succeed or you cannot learn. All those teachings are unnecessary. They are based on people's personal experience of losses and stubbornness. It doesn't have to be that way. And just like in the trading world, some will be like, you have to. There are people who have been... Some of the persons who helped me in my trading career, I've been trading before them. That's the funny thing. I've been in the trading world before them. So somebody can actually come into the trading world and in 2 years make what you've been trading for 5 years have not been able to make. What is the difference between that person that comes in and makes it? The major thing is mindsets. Some of you've been stereotyped with a particular mindset that it is even no matter anything anybody is going to teach. No matter whatever the person is going to say, until you correct that mindset and say, okay, it is possible, I will do it, you won't ever think it's possible. I was talking with, I met, there's a friend of mine, we met in Dubai. This dude, I think we met because, and that was the period he just lost his girlfriend, so he's like his fiance, the person wants to get married to. So sadly, he lost her, and we had to encourage him. So we were just there to encourage him and just speak faith. So what he now diverted his attention to was to grow an account. Within the space of a year, he grew his account from, is it $200 or so, to about $100,000 or so within the space of 1 year. And this dude did it purely cryptos. How he was able to do it, I can't say. But we knew when he started some of his trades too. We took some of the trades together, which I made money from at the time. But he was very consistent, like 247, blah, 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 blah. Now everybody has their style, everybody has their mood. I'm just sharing his own experience or testimonial. Now, why am I saying this? These are the kind of people I relate with. See, people that, because I see this, I know this, therefore I have the mindset about this. So when you see people who will say, oh, it is not possible to make this from this, you can never see me relate with those people, be close to them. You will never see me close to them, no matter the money they make. Why? Because I don't need someone whose mindset will come and affect the result I'm getting. The reason why some of you, no matter what you learn or hear anywhere regarding trading or what you've been taught, it seems like you're meeting a roadblock and it's like you're in this near success syndrome. You lose. It's because you need to unlearn and relearn. In the unlearning is some of the excess knowledge you have. You need to wash off your brain, off the unnecessary mindset, and then carry the mindset that is possible. Go on YouTube, go on YouTube, go online. There are a lot of amazing trading videos or so that help to shape your mindset, help to shape your possibility that, okay, this thing is possible. Many of you, those of you who've been following me for a couple of years, especially when I was doing majoring a lot on synthetic indices, you've seen me flip accounts time and time again. Most of the things you see people doing like now, when they flip account, they post on social media. I used to do all that very well. Many of you, I think some of the videos are still there in the House of World Results channel. I compiled there also from even some videos in 2020, 2019. I kept some of them there, which you can go and watch. Most of this is I think we even did a lot of series of challenge I did with you guys. Add you guys together in a group and we created accounts live. I funded $500, flipped it within 2 days or so, or within 1 day. All those things. What was I trying to do? Bringing you together to believe that this thing is possible. And you've seen it over and over and over again. But the number one thing here is mindset. Mindset is very important, because see, if you have a frustrated mindset, you will enter the same trade with others. Those people you're going to enter it, they'll be making progress, they'll be making results, but you will not make progress, you will not make results. So it is very, very important. Number two, we're talking about HPT. Number two is HPT. HPT, what does HPT mean? HPT means high probability trades. High probability trades. Now, high probability trades are trades that has a high propensity of success and a low propensity of loss. High probability trades are trades that you are more confident in. And this part is an aspect that 90% of us, we already have that privilege, because this is most of the trades I am sending. Kenny sends trades, Teddy sends, Kingsley sends. We're about 4 persons. That's about 4 of them plus myself, 5 post trades or so. And every one of them posts their high probability trade, because of course they will not want to post a trade that they know that they won't want to fall their own hands. Not just in front of for the people, also for me. They won't want to fall their own hands, because them posting here means I'm trusting them. So they are posting high probability trade. So that area set is solved already for you guys. Then I am posting, but I'm going to share my screen now. Now, in high probability trades, 2 things are important: the asset class and the strategy that is being applied. There are a lot of trading strategies people use, a lot of trading strategies people use and all that. There's some of you I made to be able to unmute yourself. Let me know if you can see my screen now. Just let me know if you can see my screen.
Yes, sir, we can see your screen.
Okay. Now, when it comes to cryptos, for example, BTC, using BTC as a case study. When it comes to BTC, when it comes to the crypto markets, there are a lot of strategies people use. For example, one of the things that is a very key factor, where you see me sometimes, I'm so confident that, okay, this is what the market is going to do. This is what the market is going to do. I'm very sure. It's based on a high probability trade, high probability propensity. Now, there are 2 things that are very, very important that are confluence with the crypto market. Number one is, when we look at the USD dominance, is a very DXY is correlates with BTC. But the DXY and BTC has been lagging for a very long time now, recently. The reason it is lagging is because of the US economy is really bad. The US economy is terrible, and the global economy of the world is what we call in a balance. And crypto has not been fully reset. In other words, crypto has not fully, how am I going to put this now? The full equation of the recession in the world or the negative impact of the economy has not gotten into crypto as it should. And that is why it seems like DXY is lagging with BTC. So, but the USD dominance is like a crypto version of the DXY. So it flows very accurate with the BTC for the time being. And if you see here, there's what I expect to happen. There's what I expect to happen. This was where the sell for BTC started from. When I told you guys that BTC will sell, do not worry. This was when I started selling from. When it got to 7.11, we started selling from 7.11, and then we closed because I was like, I think it took us out. I was like, everybody should wait, but this is still going to really sell massively. When it got to 7.04, it started selling. BTC started selling till it got here, which was where I said this same point I said is going to retrace from. Now, there are 2 points. 7.45 is the first retracement point, 7.55. Now, this 7.55, by the time it gets there, BTC should have gotten to 29,000 to 28,000. So between 28 to 29,000, around that range. That's where BTC is going to get to. So when it gets to, that should be the bottom of BTC for now, before it goes back to 5K. But now, this is me showing you an example of how I get a high probability trade for crypto. Like I said, asset class differs. The way you get a high probability trade for an asset like synthetic indices is different. The way you get a high probability trade for an asset like for currency pairs is different. But now, the first thing here is I want to be sure of BTC activity. Now, when the weekend came in, we've been in this. Look at how BTC has been doing. If you notice, it's been moving up and down, moving up and down. How do I draw this now? I'm coming. Let me use. Let me use the rectangle. If you look here throughout the week, I said to you guys that since we're in the weekend, there's no much liquidity. I think the market is going to open by, is it 12 a.m. or 12 p.m. a bit, 11 p.m. What time? Oh yeah, traders. Those of you who trade forex very well, they say, what time does the market open again, please?
11 p.m.
Yes, 11 p.m. Now, when the market opens by 11 p.m., I think liquidity should come into the market and all that, and you get activities moving. But throughout the weekend, look at what it has been. The market has been ranging. If you see the way it has been ranging, this is what I said is going to be ranging. But there's something I'm expecting. This is what I'm expecting. One, market, despite the fact that this market has been ranging, it has not gone below. You see the bottom of this thing, it has not gone below it. It hasn't gone below it. This is what I expect. This is what I want to happen. Let me show you guys what I want to happen. Let me use an arrow. From here, when the market started buying, I thought it's going to get to this point. And then from here, come down to this point before it now goes higher again. This is what I expect. This before it goes higher again. So, but instead, Instead, so if this thing is moving higher, BTC is definitely falling. If it's coming down, BTC is buying. Now, if this gets here, I will be very confident that BTC is going to sell. BTC, this USDT dominance is going to be selling down, which means it's definitely going to be bullish for BTC. It's going to be bullish for BTC. And then from here to here, it's going to be bearish again. And then from there, that point, it will not turn bullish. So this is like intraday movement. We'll go to Bitcoin. But let me just capture the activities of what I expect. Now, this zone is not a strong point for me. It's not a strong point for me. It's not a strong point for me. So the market is ranging. If the market decides to close below here, below this plot that is already like a support, then it means the whole dynamics of what I expect to happen has changed. That's why sometimes I'll be like, the chart for yesterday, ignore it. Let's start with a new chart. I'll not start reanalyzing again for a fresh day if the market dynamics change. But if the market dynamics remain the same and the USD dominance gets to this point, then it means that BTC is going to sell to this point, and then this place holds and BTC starts going down. It means that BTC is definitely going to, USD dominance is going to get here, and then from here moves. Now, this thing you see here is a high probability concept. This is going to give me an assurance of how BTC is going to move, how BTC is going to behave. Now, since I've gotten this, I will now go to here. Now, this is why I said I talk about trading on Bybit. If you look here now, the analysis on Bybit, BTC is 30,234, but on a different on here, BTC is 30,252. So the exchange price on Bybit futures is different from what you see on other platforms, other exchanges. Very important. That's why I prefer using Bybit. Now, look at what has been happening. Based on what I anticipated, which I shared to you guys, I first entered a sell here. I don't know if I even got it. And we came down, when this sell came down, and then came out, came back to entry. If you entered again, it will range, almost take you out, come out a little, go back again. Then this one just, look at this very, what kind of candle is this one? Moved up, moved down, and then this is a candle of confusion. That's what the market is just doing, confusing people. And then, yeah. So what you're seeing here is that this thing playing out here is entirely, the market is just ranging. So if what I initially anticipated, if that is to hold, that means BTC is going to come down here. And if BTC comes down here, definitely you should buy up. You should buy up to maybe these zones before moving lower. Let me use this other BTC chart, which is a different price. But I use the Bybit own to send our, to send the analysis for you guys, because of we trade on Bybit. But here too, I just use this to chart for basically what I expect and what I want to happen and all that. So now if you see here, I'm using the Fibonacci 2 here to try to, I think I'm trying to dice so far possible entry points. Why am I even doing this themselves? Okay, I'm trying to get possible entry points of how low BTC could go before it moves higher. And here is showing that, okay, BTC could come down to this 886, this 1.13, and that's why I adjusted the stop loss a little bit lower, because it could come down, touch here or here, and reverse up to the blue lines we highlighted also. Now, if this happens, and then let's say BTC triggers and start buying, what the next thing that happens? So the first thing is I'm looking at USDT dominance, highest reaction. The reaction based on my strategy gives me confidence of how BTC is going to move. So if I get that confidence and say, okay, guys, BTC is going to let us enter this particular trade, share this trade. Now, the next thing is we understand that this market, as funny as it is, the crypto market moves in direction of BTC. 99% of the altcoins move in direction of BTC. So it will give you an assurance that, okay, this other trade, these other coins will behave like that, or these coins will behave or act in that particular way. Like, see Ethereum, for example. If you can see the chart is just very similar to BTC. So if BTC comes down and start moving up, I could automatically just, let's say once I see that, okay, BTC is moving up, I could just enter a trade on Ethereum or a trade on any of the tokens, maybe a trade on LTC, or probably a trade on, look at this coin called Waves. I think I even drew an analysis here and I forgot about it. Funny enough, look at it, even triggered. I did not even post this. I didn't post it, I didn't take it, but I actually analyzed it that the price will come into here and moved up. And it moved up. Oh, funny. Can't actually, I used to forget chart a lot. But however, this is the point. We could see that, okay, we come in and see that wave is moving in the direction of BTC and you enter it alone because you are confident. I'm confident that BTC is going to move in that direction. If it start moving in that direction, 90% of the odds we just follow likewise. So automatically it's definitely going to like print opportunities. Automatically it prints opportunities for it prints opportunities or provide opportunities for HPT. Now, I'm not talking about strategy tonight. I'm not explaining strategy or that. That will be very hectic for a lot of people. Because trying to explain how I do this or do that or that, but because we are already doing that for the calls that have been shared, the charts that have been shared. But I'm showing you guys how I get HPT when it comes to crypto. So how I get HPT when it gets to crypto, first of all, I want to be confident of the direction of BTC. And before now, I make use of DXY, but the DXY is lagging because of the fundamentals in the economy. So right now, I'm making use of the USDTD. And if I'm very certain of the USDTD, my strategy tells me that this is going to happen. Like I just showed you guys a context that, okay, the USD is ranging. But I will have confidence if it gets to that point. I'm anticipating it. If it gets to that point, because that point I highlighted is a point D. Let me where is this? Let me just save this for you guys and paste it. So the confidence now will only happen if this USDTD I just posted the chart now. If that support holds and it gets to 7.42, I'll be very confident that okay, BTC is going to buy from that level. It's going to buy from that level. I'll be very confident, and it's going to buy to till whenever USDTD gets to 7.11. I will be so confident by that time. Because if it draws down to there, BTC is going to come down to the other earlier chart I talked where our entry for a buy is. It's going to sell down to that point and buy hopefully from there. So when you look at this is me having HPT. Now when it comes to HPT, it's one thing to have mindset, another thing to have HPT. HPT means high probability trade. So it's not just any trades you use to grow account. It's not just any trades to use to flip account, because this is where risk management now comes in. So risk management is applied based on LPT or HPT. And when it comes to asset class and strategy. Now, why I'm explaining the idea of asset class strategy and HPT with what I said is so you guys too can also have a particular understanding. Sometimes I do voice notes, sometimes I just paste the charts and write. So if you even read the charts or those of you who even have access to the course, it will be even easier for you to be able to just understand and pick and know what to do. So you will even have more results than some persons. Because, of course, in a class, everybody can never have the same level of result. But this is where risk management comes in. Let me share my screen again. Based on the fact that we are doing high probability trades, personally, I risk 5% of my account size. Sometimes 10%. Now, what does this mean? Let's say, for example, this is a Bybit demo. Let's say there is you want to enter. Let's first look for an analysis. Let me look for an analysis. Let's just analyze something. Oh, what should I use? Okay, I think it's best. Let me use an analysis that was sent by anyone. Okay, look at this BTC short scalp now. The entry for BTC short scalp is at 30,359. The stop loss is 30,450. The TP is 29,800. So what I do is I'll go to Bybit, I'll go to BTC, and then I will go to, let's say, limit order, and I'm putting 3359. I could use 3355 just in case does not. So it should make sure it still picks my order. And this account is, let's say, $125,000. 10% of $125,000 is $12,500. 5% of this amount is going to be $12,500 divided by 2. Which will give you 6,250. So this means if I said I want to risk 5% of my account on this trade, I'll be risking $6,250. Now, this means if I'm risking $6,250 per trade, risk management, now it means that for me to blow this account or lose this account, I would have taken at least 20 trades, because 5% on each trade times 20 is 100%. So you see people who, that if anybody takes 1 trade or 2, 3, 4, 5 trades and the person says, his account is gone, it's because the person is not applying risk management. The person is gambling, and you don't want to be gambling. This is why, because the principle of risk management states that you must have a particular percentage and you stick to it. You don't, for this trade, you're risking $100. The next time you're risking $200. The next time you're using $300. The next time you're using $500. The next time you're using $50. You can never grow account like that. When you grow it, you will still lose it because you're not consistent. You don't have a fixed amount. This is the number one problem most people you see. That's why some people, no matter what they know in trading, they can never progress. This is one issue. This is one major issue for the majority of them. Because, okay, they use $500 on this trade. Okay, let them use $200. That's how they lose money too. They might be posting their wins sometimes, but they will still lose money too. Because they are not consistent. A trader A real trader is consistent. A profitable trader is consistent. And this is it. You have an amount that, okay, this is the fixed amount. This is why most of them are unable to pass PropFirm accounts. Because PropFirm account makes sure you try to put you within a leash. And there's even a very smaller amount. Let's say you're using 5%. So I want to reach 5%. And my 5% is $6,250. And let me say, I'm short, so the stop loss is 30,450. I put in stop loss 30,450. This stop loss, if price activates me and hits my stop loss, I'll be losing $4,750. This is what you guys are saying here. Expected loss is $4,750. But what I want to risk is 5%. So that means I'll have to go and increase the BTC quantity here. So let me use 30 BTC and check. Okay, I still need to add up the quantity. Let's use 40 BTC. Is that now I'll be losing $3,800, but what I want is 6,250. So let's try 55 BTC. Okay, I'm still adding it up to make sure I get the exact amount that I want to risk. Okay, so we have 6,175. So let's just say it's 6,250. Now, what is the take profits? The final take profit 29,800. So I'm risking 6,250. So if this trade gets to the final TP, it will be making me 36,000 something dollars. So this means the risk to reward ratio of this trade is 1:6. So I'm risking 5%. If this trade gets to the final TP, what will I be making? I'll be making 30%. 5 times 6. 30% of my account size on this trade alone. So even if, let's say, I'm taking profits bit by bit, I could still end up making like 20%, 1:4. So now, what if I lose this trade? If I lose this trade, I've lost 50% or 5% already. But if I gain it, I've gained 30%. It is a very good trade. So if you see here, let me write this down. Under risk management, we were talking about consistent risk sizing, percentage risk sizing. And I'm showing you guys how to know the percentage your risk sizing. If you've even watched the videos, because if you see on the pin message, there are about 3 to 4 videos there. If you watch them already, you would understand this. So this will not be. This was because one of those videos when I demystified all those things, people talk about leverage. Some say you shouldn't use big leverage. I told you all those teachings are rubbish and nonsense talk. There's nothing like leverage has nothing to do with whether you're risking more or risking less. It's just a psychology game that is played on people. If you understand this, what matters is you look at what your stop loss, the RR. So this is what we call RR, the risk to reward ratio of each trade. So there are some trades that the risk to reward, most of the trades here, the risk to reward ratio are very good. Some are poor, some are great. So if you look at this one here, we enter TP1 and TP2. This was yesterday's trade, BTC. The entry is 32.55 to 3300. So let's say if you enter this trade with 32.55, I wrote here RR profits 1 to 1.5, 1 to 1.2, 1 to 4. So this means that if the first TP you would have made about 1.1.5 already, the second TP you would have made 2x already, the third TP you would have made 4x of your risk capital. That's what this means. So let's say you entered this trade yesterday at 32.55 on BTC. We entered at 32.55. And then still yet to I want to is still 5% I'm risking. So let us assume this first one I use as an example for us now. Let's say I lost it. So I've lost $6,250. And then I now share another trade and say, okay, that one it has gone. Yeah, let me see. But I still use the same. You don't revenge trade. Don't ever say, okay, because you use 5%. The reason why you see people revenge trade because of this thing that I'm saying, because they will never stay consistent. They will use 10% and risk here, 20% and risk here. So the next one they want to use 40%. What will happen? They will not end up losing everything. But when you're using a particular risk sizing on all your trades, you don't even have problem. If you see every trade I take, even the ones I put conditional order, all of them is a consistent risk size. So I'm not bothered if, okay, one loss. So let's say this first one I have lost it, and then this particular BTC sale now is going to give me money. Look, let us calculate, okay, how much is it going to give? The entry is at 32.55. The stop loss is at 33.44. So we'll go here and set the stop loss 33.44. So 33.44, and then the TP here. Looking here, if you look here, 2 entries activated as stop, profit 1.1, 1.5, 1.2, 1.4 down this range. So let me go to 30,000. So what I'm risking is 6,250 in all my trades. So I need to add some more BTC here so you get to 6,250. Okay, perfect. Is there. So now if BTC get to 30,000, I would have made $17,850. And this is not even times 4, because if you see here, the arrow we wrote here is 1 to 4. So, but the TP of this particular trade, when we close it only TP1 and TP2. So at TP2, I would have made double. So what was TP2? What was TP2 that I would have made double when BTC movement? At 3,100. We've made 10,850. At 30,080, I would have made 1 to 2, which BTC got here. So automatically, at this TP point already, I have made double of my money. Now, another way that you can easily get, this is already laid out in the chart that is being shared. Another way you can easily get this is, let's say you are coming to, okay, let us look at near that I shared for us now. So this was near trade when we got here. If you look from 1.3.3, if you cross click on this thing, it shows here risk to reward ratio is 5. So for whatever you're risking, you have to make 5 times. The risk, you have to make 5 times if it gets to the final TP. Did it get to the final TP? No. But where did it get to? 1 to 4. So this means that if I was risking $6,000 here, as I've been doing in other trades, if I'm risking $6,000, I would have made times 4 on this trade alone. So even if I lost $6,000 in the first one, I do not even have a problem. Why? Because I've already made times 4 here. I've recovered the $6,000 and I've made extra profits. Then of course, yes, there are some of trades that we give just 1 to 2, and then you just be closer because of the market conditions, especially when the market is ranging, like BTC have been doing for the weekend. We already know how weekend always are. So when it comes to weekend, we just take in small money and run, taking small money and run. The moment your trade it moves in profit, you begin to secure your profits in case it moves against you. When we know that when we are sure that okay, this is how this market is going, you can even enter again. It's just like with the way BTC has been behaving and the market has been ranging with what you're seeing that have been happening in USDT. Here would have been, let's say, as BTC, from here is the first opportunity to sell BTC. It came back, another opportunity to sell. Somebody could have just been selling. This was, yes, the one I sent yesterday was 8, yeah. So the one I posted yesterday that we made profit from, it was here, this one that happened. I just said, oh yeah, when I saw it, it came down. I said, oh yeah, let us sell. We sold. Even here too, this was when I said we should sell, but I said you guys should close it. And the closing itself, thank God we closed it, because when I said you should close it, it went down in profit too, and boom, that's why you saw this. Look at this candle you're seeing here was what BTC just displayed, up and down, boom. So some of you that are maybe you're not even good in your trading, or you're not even watching your chart, it will take you in profit and take you out. So that's why I just said, guys, close it. Me myself, I didn't close my own. I went in profit, I closed it in profit, but I didn't want us to take that chance or take that risk. Now, looking at this analogy, this was like one opportunity to sell BTC here, another opportunity to sell, another opportunity to sell. So in a condition like this, you'd have been able to, if let's say you even enter the sell again from here, you'd have even been in profit by now, because what is it? I think it's at 30 to 18 with small stop loss. What matters at the end of the day is these two things: risk to reward. So let's use an analogy. I've given us an example of 3 trades. Now, in these 3 trades, the first one, we lost it. The second one was a 1 to 5 trade, and 6,250 times 5 has given me $31,000 250. Then this second one, which is near trade now, the first was BTC. This third one now is near. I just showed us, and near was to target 1 to 5, but it gave 1 to 4. And let's say at that 1 to 4, I've made how much? I've made $25,000. Now let's just imagine that the next trade that I took, I lost it. The next one I took again, I lost it. So that means the first one I've lost 6,250. This one I lost 6,250. Here again I lost 6,250. Remember, 6,250 I'm losing. It's just 5% of my account too. Just 5% of my account. So imagine I took 5 trades, and out of the 5 trades I lost 3, and I only gained 2. Now, when you add this amount, what I gained, if you add it together, which is 31,250 plus 25,000, if you add it, total gain will give you $56,250. Then the total money I have lost, 6,250 times 3, which is I've lost, total loss is 18,750. Now you now minus the total gain from total loss. What is it going to give us? $56,250 minus 18,750. It will give us a balance of $37,500. Now, remember, 6,250 is 5% of our account size. Is 5% of our account size. So even if I took 5 trades, I lost 3 and gained 2. At the end of the day, I still have a balance of $37,500. Am I profitable or not? Those of you your mic on, you can answer the question. Am I profitable or not?
So you're profitable.
Yes, sir, you're profitable. So this means that at the end of the day, when I look at my capital, my 5% would have given me times 6. So my account have still grown by 30%. What this means is that even if you have a poor trading, what's it called? A poor trading ratio or a poor trading success rate. Even if so, the problem is not even in the fact that you lose trade, because losses are normal. The fact that is not that you're not good in your trading. The problem is majority of you don't have a consistent percentage risking sizing. And 2, you don't know how to focus or measure on RR. When you combine these 2 in risk management, even if you're following a trade, you're not even trading your own. Even if you're copying trade alone, at the end of every week, you will know that your account size have grown. You will know that your money has increased. Because someone recently, I gave somebody, how much did I give him? Said I should, he's going to do this with, he needs help, he needs blah, blah. Okay, I gave him money, he funded the account. When he funded the account, he grew the account, I think it almost tripled. And I said, you're doing a good job, but be careful. Be careful. Take it easy. I'm not putting a gun in your neck that, okay, you must pay me my money. I'm not doing it. I said, I knew what will happen, but I just let him. What happened? The next thing is that the account, it was now at $10, I'll be $20. I just kept quiet. I didn't say anything. Boom! After like 2 days through, he took that same $10, he took it, boom, to $200 and something dollars. Very impressive. And I told him, I logged into the account, I look at the mistake he's making. I said, number 1 mistake you're making when it comes to asset class and strategy, this asset class is what cost you the loss that you ignore it. Don't trade it. Even if you see a setup in it, don't trade it because you're not good in it. Focus on this is where your strength lies. Focus here. Said yes. Oh, but I said, come back 2 days later, he has lost the whole money down to 0. Now, I wasn't even bothered about him paying me my money. I don't even care because I knew he will still lose the money. If there are 100 traders that I've given my personal money to trade or funded in the past 1 year, just 1 year alone, because if you're talking about the past 5 years, it is countless. They will tell you heaven and earth. If I've given 100, it's only 5 that I can brag that they are doing well. But the whole 95 lost the money, wasted the money, or one nonsense stupid. The reason this is it too. No matter you can learn all the strategies that they will teach you in this world, and yet you will still not be successful. Not because the strategy is not good, it's because you yourself you don't used to hear word. Because I always say it, if you've gone through, especially those of you who've gone through the ITC course, one of the things I teach there in market psychology is that trading reveals who you are to you. If you think you're not a stubborn person, trading will show you that you're a really stubborn person. Because trading will test your emotions. And this thing is a constant thing. No? When it comes to trading, emotion is a constant thing. It will constantly check on your emotions. Even me myself, it checks on my emotions at times. But I've learned how to channel my emotions. So when it comes to this is why, like, the first thing I talk about was mindset, and before I started talking about HPT, asset class and strategy, which of course we're taking care of that already, because I'm posting setups. Kingsley posts, different persons are posting setups and signals as well. These people are sharing their ideas, they are sharing their high probability cost of what is going to happen. But now when these are shared, some of these things have a high what's it called, risk to reward ratio, some don't. For example, if you look at this particular trade here, that is one of the ones I sent today, which is AAV. AAV has been dancing at I really look on, but the reason it has been dancing was because, and the reason we made the stop loss to be a bit higher and not closer is because of the way it has been, the way I knew the market is going to behave, which is what it's doing. The market has been doing. It's been behaving very, very funny, going up and down. And if this stop loss was tighter, definitely it would have been hit by now. But if you observe what would have been happened, that AAV has gone in profits and then come back in loss and gone in profit. And if you have even just been closing in little profits, enter again, you would have even made a lot of money. Based on what I explained that is happening in the market now, you'd have made like some money today. Just scalping it. Close, open, because it has been going down in profit, coming back again, going down in profit, coming back again. And it's still playing, because this is why I now said you can adjust the stop loss. But this stop loss set is even high. Why is it high? Because if you look here now, let's say the entry, you entered at 72.30, average this year 75.10. Let's go to AAV. In this one, AAV, or let's say you entered at 73. $880 AAV. And you're shorting the stop. Let's say the stop loss is 77.33. So it's 6,250. That's what we are always risking. So I have to adjust it. Okay, the maximum I can order is 880. Okay, per order. Okay. Now say 77. So let's say this is what I'm looking, $3,783. Now, and the final tip is 64.18. 64.18. This means the final TP is like, let's say, almost 2x, 1 to 2. 1 to 2. So the risk to reward ratio here is small. It's poor. But now, my risk is constant. And what I can do now, for example, let's say I enter this trade. Let's just say I enter this trade, and that's my final TP. I click on short. It's triggered. What I will now do is that, you see here, they wrote partial position. I can come here and I begin to set partial position. Okay. If this token gets to, let's say, TP1, which is 70, I could use risk 50%, close 50% at TP1. I confirm. I can add another partial position at TP2, which is 69.22, close 50% for me again. Confirm. That's I can set order, and set to T1 to TP2, TP3 or so. Because most of the trades by TP1, TP2, TP3, you see, they would have closed. Or before even reversing, before some of them might get to final TP, some might not at all. But TP1, TP2, TP3, majority of the times always gets hits before anything reverse. So let's say TP3, 67.77, but what I'll put to be 67.9. So let's say 67.9. So even if it doesn't get 67.77, if it gets to 67.9, it will still close me and I'll still be happy. Now, this is how you risk. So there are some trades I can decide to just do 10%. That is in a rare basis. But then if I use 10%, the moment I see that trade start moving in profits, even before you see that, okay, I come to say, oh, secure profit. So sometimes not every time I have to be putting secure profit. You should just even understand that, okay, this thing is in profit. I should remove. I've already explained that in the previous session we had. So it's not something I'm going to teach again. By then, you should just secure profits either by taking some off the market and then moving stop loss to entry, or just moving stop loss to entry. But either way, some trades will give you small money, mega. Some you will just enjoy the arrow. A little here, a little there, the ocean, a little drops of water ends up forming an ocean. And that's how it is. You now grow, because when you focus more on the percentage growth of the account, you're now getting the key. Because let's say you started with $100,000, your $10,000 account, or let's say $100 account, and at the end of the week, you're risking 5% of it every trade, and at the end of the week, you have $150 account, for example. That means next week you will not be risking 5% of $100 is $5. But next week you will no longer be risking $5. You'll be risking $7.5 now, because $7.5 is the 5% of $150. And let's say the second week your account has grown to like $300. You no longer be risking $7.5. Now you'll be risking $15, which is 5%. What is happening? You're growing account, you're flipping into, but you're doing it in a very systematic way that will not pressure you or kill you before your time. Yet you will have enough money to achieve what you need to achieve in life, sort out things you need to sort out, and benefits. I would like to take questions because we've taken a lot of time. I want to take questions from people. I think if you have a question, you can try to click the request on the mic and I'll unmute you, sir. I don't want the session to be more than it already is. Okay. Chook Money, you're muted. Bumon Sensus or so. I just unmuted you now. Bumon Sensus, you can ask.
Good evening, sir. Can you hear me?
Yes, I can hear you. I can hear you.
Oh, okay. My question is this. While on the group, I know that you just don't post one trade setup. So is it advisable to go to enter all setups, or is it advisable to just pick one setup to pick one setup to trade on? That's like my first question.
Okay, based on this question you asked, this is why whenever people join, the first thing I said most times is to watch the pinned videos, because this question has already been answered in the previous session in one of the pinned videos. And that is based on understanding the trades, how some charts, because some people were confused about the charts posted by others and not just me. Other people were posting their charts, so how to understand them, and so because how do you take a trade, multiple trades with there's I think that video we also posted it on YouTube, how you can take 100 trades on Bybit with $100 account or so. That is based with using the principle of conditional orders. With conditional orders, you can take every trade's position there is. So it all has to do with your personalities. Do you have time to follow up and trade? What you're doing is basically copy and pasting, or you don't. You have time to follow up on trade. So once you have the time to copy and paste and make money, then it's up to you to just copy and paste and make money. Watch the video that the last two videos. The one that has to do with the last session we did, so it was also on Telegram here. Is on the pinned this thing, and the one we did on taking 100 trades with Bybit. You using the conditional order strategy. You can actually take all of them. You could also decide to go with the one that you feel right or you feel okay with, and and ignore the one you don't feel. But at the end of the day, some people end up taking one that one is one that maybe hits stop loss, and the other ones they refuse to take will be the one that gives profit or so. So it now becomes an unfortunate experience. So it's better you balance the equation and on that aspect. I hope I've answered it.
Yes, sir, you have. Because the reason I was asking is, sometimes you can just have like a small amount of money in your, let's say you have $50 and you do,
Mm.
let's say 25, 25, 25, or maybe 50, and you have like 25% of your account left. And
Mm.
so all those I thought I was gonna ask, like, is it best to concentrate on just one trade with your money, or just to
That's the
spread
same
your
thing
money? Because
I
but
talked. That's why we talked about just watch the video. That conditional order is what you need. So let's say if you're risking 5%, let's say a $50 account, somebody's risking 5%. 5% of a $50 account is $2.5. And if you're using a conditional order, you can actually take 50 trades on that $50 and it will not even be affected. That's the strategy I thought. I thought that strategy is on the YouTube and is tagged on the pinned message.
oh, okay, sir. I don't think I have any further questions.
Okay, Bumon Sensus, you want to ask a question?
Good evening, boss.
Yeah, good evening.
Majority of what I want to ask, you already asked it. Then I will
Okay.
ask. Then I will ask. Then I'll ask this one more. In one of your live sessions, you talked about playbook. Sir, can you hear
Playbook.
me?
Yeah, I
Yeah,
can hear
yes.
you. I can hear you. What did I say about playbook again?
You were mentioning. I can't remember exactly, but you were saying something about trades on your playbook, something like that. Can you teach us anything about that?
Sorry, I think what he talked about was trading journal. That was, I think, that was the last
Okay,
question.
yeah. What I was referring to was basically a trading journal. And I have a trading journal. I don't know if where is this book again, sir? If I have a trading journal which I use, and if you see here, let me show you guys. I turned off the lights in my room. Come in a bit. Okay. How do I do this now? So if you see here, this journal I use, and I use this too. I use this journal and I use this. Now if you see here, you get to see this should be what's it called? 30th of June. 30th of June 2023. This is from 1st July 2023. Every single trade I journal it down. Every single trade I journal it down. I have a very good record. And now this is the thing why when people come to meet me on when people come to the last person that came to meet me and he says, Shifu, please help me out. Blah, 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 blah. I say, you say you can trade. You have people I know you have people in your community. You say you're teaching and all that. I asked him one question. Can I see your trading report? Can I just see your trading report? Because at the end of the day, your trading report is what is needed. Can I see your trading report? And this is something most traders lack. Your trading report shows how well or how good you are as a trader. You can be able to gauge your growth. You're able to know, are you making progress? So even the trade, even if I take Kenny's trade, I write it down that okay, I took Kenny's trade. So if it's steady, if it's anybody, if it's Kingsley's trade, I even write it down that okay, I'm taking this person's trade in a journal. What am I trying to do is okay, I can know that okay, there are various ways people use. I'm a journal person. I'm a writing person. I have books and diaries and books and diaries. That's who I am. But you could decide you could not be a book person. You could actually be someone who has a phone person. So you begin to type online. No, that's the era we are in. Everybody wants to type online, have a journal online. It's still fine. It still goes. But it is all about, it's a personal growth technique. It's a personal growth. It's not a must. It's not mandatory. But anybody who wants to say, okay, you want to make a living out of trading, you want to, it's something that it helps you to. It's just like when people who have, if you have a shop and then you're making sales, you do bookkeeping, we have data entry. You know then what comes in, what comes out. That is what you do. If you have a bank account, there's a bank statement that tells you what comes into your account, what goes out of your account. So when it comes, accountability is something that helps you to grow in every area of your life. It's not just basically in trading. In every area of your life, once you begin to add accountability, you begin to see yourself get better, get better, get better. I do it even in my own finances. In personal finance, I do it. I could tell you how many millions went through my hand yesterday, how many millions went through my hand today. I could tell you how many millions went through my hands this same time last year. I can tell you the exact amount of money I spent. All those things, it just helps you. The same thing when it comes to trading. So you'll be able to know, okay, you're making improvement. Every single trader who I know that is a close friend of mine who is making a large amount of money from trading, who grew it from little to something, all had a trading record, a trading history, a trading statistics, which you could use, you could monitor and see how it gets to that particular point. So it's a personal thing you open, important. It helps you to study your mistakes, your losses. You just know if I'm losing. I know if I'm losing, for example, I know why I'm losing. If I lose, I know why I'm losing. If I'm making money, I know why I'm making money. If I'm making progress, I know why I'm making progress. And this is it. Because of this. Starlight, I just omitted you. Is it Starlight? Abikirion FX. I don't know. I don't know which of them was highlighting. That Starlight or Skirion FX. Adeola Opeyemi.
Hello?
Yes, I can hear you. Go ahead.
Good evening.
Yeah, good evening.
And thanks for all you do. God bless. So please, I've been wanting to ask a particular question. Actually, I don't know if it has been answered before. I on Bybit,